Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at XPeng.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. We are dissecting a really fascinating story today.
Yeah.
It's one that's fundamentally anchored in its technological advantage.
Yeah.
We're going to look beyond just the vehicle sales numbers and, look at the competitive moat they are so aggressively building.
And when we analyze XPeng, I think that's the key, right? The real differentiator isn't their manufacturing capacity or even their current sales volume.
Right.
It's the fact that they are one of the very few players committed to a full-stack, self-developed AI system, which means they own the hardware, the computing, the cloud data, all of it. They can iterate without relying on, external partners.
That vertical integration is it's absolute key. I mean, for their long-term survival. They control the entire chain, which lets them fine-tune these advanced autonomous capabilities like their navigation-guided pilot or NGP and their VLA 2.0 software. This is a foundational and infrastructural investment.
And the sheer computational muscle they are building is what, frankly, it stunned us when we dug into the specs.
Oh, yeah.
We're talking about raw processing power for their autonomous systems reaching up to, 3,000 TOPS?
3,000. And for the listener who doesn't track chip performance every day, TOPS, that stands for tera operations per second.
It's basically a measure of how many calculations the vehicle's brain can perform every single second.
And that 3,000 TOPS figure is? It's just massive. I mean, reports suggest this is 8 times more powerful than the current systems you'd find in major competing vehicles right now.
So the question then is why? Why do they need that much power? Is it just overkill or is it a smart use of capital?
That's a critical point. Is 8x necessary?
Right.
I think the benefit of that massive computational buffer, that 3,000 TOPS, is essentially insurance. It's future-proofing.
Okay.
It buys them faster, more seamless over-the-air updates, much better redundancy for safety, and critically, the ability to run level 4 software when it's ready without needing new hardware.
So they're preparing for a system far beyond just, the assisted driving we see today.
Exactly. And this leads directly to the strategic implication of all that proprietary IP. This tech isn't just about selling better cars today.
No.
It's the gateway to the future monetization of autonomy. And they're already translating this tech into regulatory wins, which is the necessary step before you can have any kind of mass deployment.
That's where the L3 testing comes in. I saw they've already secured some advanced regulatory positions, including level 3 testing permits in Guangzhou.
Yes, and level 3 means the car can handle most driving tasks, but you, the driver, still have to be ready to take over.
Sure.
But getting those permits, it shows the government is confident in their development, in their deployment timeline.
And if we connect this level 3 testing to the larger endgame, the goal is L4.
L4 autonomy, and eventually operating their own robotaxi fleets. They're targeting this deployment as early as 2026.
That's soon. Wow.
Yeah, with plans to have 3 specific models capable of L4 autonomy by that year.
So this isn't just a car company anymore.
Yeah.
It's an AI company that's betting its entire future on winning the robotaxi race. That technological dominance is the bet.
It is. This decision, it signals a definitive pivot away from, short-term shareholder appeasement like buying back shares or paying dividend.
Right.
They are acting like a tech giant in a land grab phase. They believe they have to win the L4 race at all costs.
But all that high-stakes tech, it means nothing if the company can't pay the bills. So let's shift to the financial picture, because we have seen some very bullish signals recently, tied directly to delivery success.
We have. We've seen a clear market reaction to their operational success. Robust vehicle registration growth in China fueled, a 7.2% stock surge just recently? But what is maybe more compelling for the future is the acceleration of their international footprint.
Tell me more about that overseas push. It sounds like they are significantly hedging against any domestic slowdowns.
They are. They reported a staggering, I think it was a 95% increase in overseas deliveries.
95%.
Yeah. That kind of global uptake, it confirms the product market fit for their models outside of their home market. It points to accelerating international demand.
And we are seeing this delivery success translate into the recent financials, which is vital. Strong revenue growth, and, crucially, improved gross margins.
And that margin improvement is being driven primarily by the popularity of their core higher margin models, right?
Specifically the G6 and the X9, exactly.
But, we have to talk about the immediate profitability challenges. The company is not profitable right now.
A key risk for sure.
It's a persistent risk factor. And the only reason this aggressive strategy is even viable is that they hold substantial cash reserves. That buffer is what gives them the balance sheet stability they need.
It's so interesting that they have the cash, but they're clearly choosing this path of maximum growth and tech investment over, say, shareholder returns right now.
Absolutely. They are strategically reinvesting every single dollar. That capital is flowing directly into autonomous driving R&D and building out that overseas production capacity, like we're seeing with the plans for Malaysia.
So that R&D spend is the primary culprit, pressing down on near-term profitability.
It is. And investors need to be aware of that. But the cash buffer, it mitigates the immediate fear of capital calls or, diluting shares in the short term. It's a clear choice. Sacrifice today's profits for the high-margin market of tomorrow.
I know a lot of our listeners are tracking the momentum plays and that this leads us to the recent price action, which, well, it might worry some people. The shares have dropped a significant 35% recently.
Yeah, that sharp pullback, it mirrors the broader demand slowdowns that the entire EV sector is feeling.
Especially in China.
Especially in China, yeah, following the subsidy rollbacks. It's not unique to XPeng. But technically, this downturn may be signaling an opportunity for those looking to start a position.
Okay, so let's focus on the technical side of that. When a stock falls this hard, why are some analysts calling it an opportunity?
Well, technical analysis suggests that the stock is now nearing an oversold zone. This means statistically the selling pressure is reaching extreme levels.
So basically, anyone who wanted to sell has probably already done so.
That's the idea. And we're watching a specific key support level where a potential rebound could happen, specifically around the $15 mark.
What's so special about $15? Is it just a round number?
It's not just a round number, no. It often represents a psychological and historical base. If the stock can hold that $15 mark, it could form a really strong bullish base.
I see.
And if you look at momentum indicators like the Relative Strength Index, the RSI, it is signaling deeply oversold conditions. It's ripe for a technical reversal once a major catalyst hits.
So this context really aligns with a buy the dip narrative then. You're anticipating a breakout once some key delivery or expansion news hits the cycle.
Exactly. And that brings us directly to the concrete catalysts coming up because that global ramp-up is the lifeline mitigating the domestic slowdown.
The expansion timeline is incredibly detailed, which is great. It gives investors tangible milestones to track.
It does. The critical international ramp-up starts with Malaysia. EV production there is confirmed to begin in 2026.
And they've provided remarkably specific dates for that. I saw the G6 assembly is set to ramp up by March 31st, 2026.
Followed quickly by the X9 assembly ramping by May 2026. These are solid, tangible goals that shift the narrative. It's not purely a China-centric story anymore.
Right. And beyond manufacturing, and they're also deepening their global R&D presence. The new Munich R&D Center is opening.
Which is vital. Essential for adapting their autonomous tech to European driving conditions and their regulatory standards. And we're anticipating the upcoming European debut of the next P7 sedan.
And on the tech front, those Level 3 tests and robotaxi pilots in Guangzhou are the crucial events to watch over the next few quarters.
They need to move from successful trials to actual scaled operation. The big technological catalyst, though, is the global adaptation of their NGP system.
Ah, right.
That's expected by Q4 2026. That means their self-developed navigation system is ready for prime time internationally.
And then there are the moonshots, the high-risk, high-reward catalysts that could just drastically accelerate the whole AI ecosystem and their valuation.
We're talking about significant optionality here, reflecting the company's broad AI ambitions. There's the rumored potential to open source VLA 2.0.
Which would be huge.
It could massively accelerate third-party partnerships, or even set an industry standard.
Plus, you have the promise of the Iron Humanoid robot production in 2026, which leverages their AI platform and the ongoing trials of the, what are they calling it, the land aircraft carrier flying car concept.
Yeah. I mean, if any one of those, the robot, the flying car, or open sourcing the software, if any of those hit, it would fundamentally re-rate the entire investment thesis.
It would confirm them as a diversified AI leader, not just another EV maker.
Exactly.
Okay, now we have to turn to the primary risks. Every high-growth investment carries significant downside. We already touched on the pressure on near-term profitability from that heavy R&D spend.
That R&D burn rate is a constant headwind, yes. And operationally, they have the immediate necessity of hitting very specific December sales targets to satisfy their Q4 guidance.
A miss there would be bad.
Missing that target by a significant margin would severely rattle investor confidence, regardless of any L4 progress. And you can see this caution reflected in the options market. A lot of traders are positioning for downside protection.
So the market is definitely hedging its bets. What about the structural risks, the competition in China, and the overall sector slowdown?
Competition and the post-subsidy demand slowdown in China are undeniably significant factors. I mean, they're the exact reasons the stock fell 35% in the first place.
Right.
But this is where the constructive view emerges. These risks are likely already priced in by that massive drop. The current oversold technicals suggest the market has already metabolized this bad news.
So the worst of the short-term pain might already be behind us, assuming you trust the technical indicators and their cash reserves.
That's the core argument. The strong international expansion plans, like that confirmed Malaysian manufacturing ramp, they offer a clear and powerful turnaround narrative that directly mitigates the current China slowdown risk.
It's a hedge.
It is. If the international business offsets domestic stagnation and those margins continue to improve, the stock has a strong case for re-rating.
So what does this all mean for you, the listener? If we summarize the core investment thesis, it seems the entire story hinges on whether that AI-driven level 4 autonomy mode and the accelerated global expansion.
Yeah, can they deliver that multi-bagger upside as the company moves toward that profitability inflection point?
It really feels like we are betting on the AI roadmap here, not just the car company.
It's a huge psychological shift for investors, but it's crucial. This is not a value play today. It is a future monetization investment focused specifically on the deployment potential of their robotaxi fleet in 2026 and beyond.
So your time horizon matters immensely.
Absolutely. You are looking at either a quick swing trade, maybe to capture a technical rebound into the Q4 earnings report, or a multi-year hold, betting on that L4 deployment and global scale.
The technology is undeniable, the cash is there to sustain the burn, and that international roadmap is clear. The question we posed earlier remains the most provocative one for anyone holding long-term.
When does the market start valuing the promise of autonomy, that 3,000 TOPS capability and the L4 certification over the present day's margin pressures? That timeline? That will define the stock's future, and that's the research you need to be doing now.
A compelling setup. Thank you for joining us for this analysis of XPeng. Make sure you subscribe and catch the next analysis.